Hey everybody, this is Jose. We are starting our session now. Let me change the setting of the screen so we can see each other. How are you everybody? Good to see you all. Today is April 6, 2023. This is our trading and review session. As we are getting started, of course, it is important that you are connected with the chat room. In order to have access to the chat room, you need to use the website web.speakup.info, and today's room key is 43975. You all probably know that this session will be then later on posted on our social media channels, such as YouTube, for example. But the chat remains private to the attendees of the session as we attend live. Those are our members of the coaching plan. And therefore, in order to access the chat room, you guys need to use that particular room key. So I would like to request everybody, please, to go ahead and enter the chat room. And also, just as a confirmation, as always, I would like to request everybody to go ahead and type a quick hello message on the chat room. That would help confirm that you guys see me, you guys hear me, all is good. In the meantime, I am turning on the disclaimer in the bottom part of the screen as well. We'll keep it running for a little bit, so disclaimer is clear for everyone. Please read it carefully. This is important information. And with all of this said, we'll be ready to begin in just a sec. So just waiting for your initial hello messages. So I know that everybody is good with the chat room, which is obviously important for us to communicate during the session today. So do that, please, when you have a moment. I am waiting for your messages, guys. Thank you so much. I know it takes a little bit of time to set up. Here we go. Joe, how are you, my friend? Good morning. Thank you for that. And I guess that all of you are now ready to begin the interaction. Remember that you could utilize the chat box in different models. You can use it on the website, which is web.speakup.info. So if you want to have it next to the video stream where the session is taking place and you want to have the chat box there on the right or the left, so you can just put your other browser window there, and that's fine. Or if you want to have it on your cell phone or a tablet, there is also an app available for iOS devices as well as Android systems. So you can just download, install that, and as long as you type the right room number, which is 43975, then we are ready to go and to work together in this 1 hour session for trading and review. So let's begin. Trading and review, what does that mean? Well, that means that my assumption is that you guys have been utilizing our tools, have been practicing trading, are putting your methodologies together, are doing some backtesting, some practice, or some very serious trading, depending on you being newer to the markets or being more experienced. With all of it, no matter where you're at, probably you have questions, probably you have discoveries, probably you have concerns. So the idea in this session, that's why it's called Trading and Review. The idea is to review whatever you'd like us to review. Hey there, I can see a person called Hello saying, hey there. Hello, I do not know who you are. So if you want to uncover that, you can just type who is hello. So I will know who you are. You don't have to, and I will not mention it publicly if you make me understand that you don't want that. But I'd love to know who is hello. So as I was saying, I am expecting that you have, again, those discoveries, concerns, questions, and all of the above. And the idea is that you can use the chat box to phrase those. So we can use this 1 hour session that we have together to go over either trade examples or chart examples or your own examples and do some review. And certainly today's session, happy to look and find a couple of trades, but also happy to go ahead and convert this session into a lecture session, because being a trading and review session, the idea is that I adapt to whatever your needs are. So I'd love to hear more about that, as well as while you are probably typing or getting organized. I would also want to mention that 3 days ago on Monday, we did one of our open meetings. Let me share that on the screen for the ones of you that may not know what are the open meetings. Let me bring our website to the main screen, so that way everybody becomes aware of that. So this is our website. If I scroll down all the way to the bottom of the website, so you can see here we got the trader meetings, okay, which is a place on the website, and you just need to go to the free sign up process. So you have a username on the website, and then you can come into the meeting room, which is right here in this place. Okay, we are meeting twice a month in the trader meetings room. It's the first Monday of the month, which was 3 days ago, and the third Monday of the month. Those are the days where we meet. And in those sessions, it's not a lecture type of session or anything like that. In those sessions, what we are doing is that we are all sharing screen, ideally all sharing camera as well. Someone knows why I'm smiling right now because she never turns on the camera. But we are interacting in a format which is a meeting, meaning that everybody is discussing their own things, and I am not the protagonist in that session, since everyone could share screen. Today is different. Today I am adopting a little bit more the role of your coach, and therefore I am a bit, if you wish, the protagonist, in the sense that I am supposed to be the one doing most of the talking, as a response to what your needs are, which often may imply some sort of a lecture. Okay, but not on those Mondays. On those Mondays is basically a collaboration type of session. It's a meeting. It's a meeting between traders. So I know that in the past few meetings, they have been extremely interesting, by the way, and you guys have phrased certain needs. We'll meet again on the third Monday of the month to continue. But also, for example, Joe, I see you're here with us today. Again, if you have certain questions, or as a continuation of what we've been discussing in those Mondays, you'd like me to go in a certain direction today, so then feel free to comment, and happy to use our time today to start working in the direction that you guys requested me to walk in those sessions. Okay, so I am all yours, my friend. So please type what you'd like me to cover today. If you want me to find a trade, or you want me to do some S&P analysis, I'm happy to do that, but please phrase it so then I know, what is it that you'd like me to do. Mark, how are you? Good to see you. Yeah, I see you. You type there MJ colon. You don't need to type that, because if you look right down below next to the date and the time where you posted, I can see your name. So that's why the prior message next to the date and the time, I see the name hello. And I don't know who hello is. Anyway, so again, let's go ahead and be dynamic here. I've been doing a lot of introduction today to give you time to type. And so far, not so much typing. Again, you need to lead me into what you want to do, in order to make this session to be of a 1 hour duration. If there is not too much for me to trade or review, then we'll conclude the session sooner. And it's a shame, because we meet once per month. So please go ahead and do not be shy, and lead me into what you would like me to do. Jeff, how are you? It's good to see you as well. Glad to see you here connected with us. And a question for you, Jeff. Have you started your homework? Maybe you have questions about your homework if you started, putting together what we discussed the other day on Monday. Maybe you have questions, so you can certainly phrase them here as well. And again, happy to take those. Mark, I have an idea. When you find a trade and enter it in SIM, could you let us know if it's one you would take live? You mean when we have done in the past live trading sessions and I took a trade in SIM, you're asking me the question that if that same trade that I took in SIM, I would take it in a live account? If I understood well your question, and that's the question, please rectify if I did not understand well. But if I understood well that this is your question, the answer is, of course, yes. I would never take a trade on SIM that I would not take in a real account. There is a subtle addition to this comment I want to add, okay, which is the fact that if I am running an account and I have multiple positions in that account already, Then, of course, sometimes some of the sim trades I have taken for educational purposes, for practice, for demonstration, for illustration, all those trades that I do to help you, maybe I would not take it in my account because maybe, let's say I got too many long trades and that was a long too. So I don't want to add that much positive delta, so maybe I would not take it. But I would not take it given other positions that I already have in my account. That would be the reason why maybe I would not take it. Now, putting on the side that, let's assume I got nothing in my account or what I have is compatible with that trade. Whatever trade I ever executed in a sim account, it's a trade that would have been happy to take in a real account, because if I execute it in a sim account, it means that it meets the rules of the methods I use when I trade, and therefore I'd be happy to take it live too. If the trade was not meeting those rules, then I would not have taken it on a sim account. And that's what it is. There may be a case or two in the whole history of all the live streams where maybe someone was asking about order placement, and I'm like, okay, I'm going to take this trade just so I demonstrate order placement, and maybe the trade was not properly planned, but that's because I was demonstrating order placement. If that trade was as a result of going through the process of planning a trade and I did it in sim, then again, I would certainly take it in a real account too. Okay. Good. So I guess I got you right, and I guess that you got your answer there, Mark. That's a great question. I'm curious to know why you're asking, if I may ask, because you know me well, Mark, isn't it? And you know I'm systematic. You know that's what I do when I trade. So yeah, the answer is kind of like embedded in that word of systematic, you know, being a systematic trader. But again, maybe you're thinking something else, and I'd love to know. Joe. Yes, yeah, Joe, exactly. You read me well. You summarized in one sentence what I said. Thanks for that. It is exactly that. If there have been an exception, I have explained why, maybe order placement or something like that. Just like there are times, the opposite is true as well. There are times where maybe I took a trade, and maybe because it's a sim account, we were not being filled on time, or maybe I wanted to go to do another trade to have a richer session. And you saw me at times in the past change a limit order to be a market order with option spreads, for example. And I would say things like, please, please, please don't do that, right? Never use a market order to do an option spread. And I would say, I'm going to do it just so I get the feel, so we can review the trade in future sessions. But please don't do that. Make sure you negotiate your entry prices properly via the use of limit orders. So, yeah, so anytime I deviate from what is right to do, which I don't do often, but if I do, normally it's for order placement purposes. Every time I would do that, I would normally make a comment around that. Yeah, so thank you, Joe, for that, and also thank you, Mark, for confirming that this is what you were asking, and this is and the answer is understood. Thanks for that, guys. Thank you very much. Cool. So hey, anyone else? What's next? Do you have any additional questions? It doesn't need to be questions. It could be also comments, or it could be requests. Maybe you want me to plan a trade, and maybe you would like me to find a whatever. Double calendar, or maybe you would like me to find something, or maybe you just want me to go over the assessment of the S&P 500 index as the broad market. I mean, there are so many videos recorded on the YouTube channel on the things that we do. But again, maybe you, for whatever reason, today you've seen something in the markets live, and you would like me to perform some of the actions that we have done in the past many times. Happy to do it. I just want to perform whatever is most useful to you, instead of just running, the process the way I always used to do, because you've seen me do that hundreds of times. So I want to be a bit more, adaptable and adapted to you. Mark, I think I was recalling one where you said this was one to teach us more things, but it was not an ideal trade. Yeah, so it's possible. It's possible, and again, that is what I said, isn't it? That is possible. Maybe I don't even remember what that would be, but maybe there was a specific scenario, or maybe it was a great trade example, but maybe there was lack of liquidity on a specific strike. I'm not sure exactly, and that would be an exception, and I would not take the trade. But I did it for practice, and illustrating either a trading methodology or trading strategy that we didn't use often, or maybe illustrate a mistake. And if that was the case, I phrased it. Okay, so thanks for confirming that again. This is great, and certainly for the ones of you that are newer to what we do, that may be looking at the vast amount of YouTube videos that we have on the channel. I'm sure you will appreciate as you go through the videos what Mark was asking, and Joe and Mark were also adding to my response, because it certainly would help you to understand better those videos better. Mark, two more questions. Go for it, my friend. I think today will be a double calendar day, but is there a matrix scan that is specifically for vertical spreads? Okay, so let's look at those two questions in one at a time. So first of all, the first one is, I think today is a good day for double calendars, and the answer is yes. Okay, why? Well, Mark, let me go over the rationale, and later please confirm that this is what you concluded yourself. And I'm pretty positive that's going to be the case. But let's go over this for everyone, and also for your own confirmation, and then you confirm to me as well. Okay, so we're in sync. So anyway, so why is it that today it would be a good day for a double calendar? Well, first of all, because we have a market condition when looking at the S&P on a daily time frame, where auto climate is blue and confirmed. So it's an up market, okay? But we are in this type of market condition for 9 candles. A normal thing to happen is 5. So it's almost double. So it's certainly late to the party. And the extension of this market, the max distance, have pointed at levels of maximum 146, which is way above what 2 standard deviation passed, and this is late to the party. So while the market is confirmed to be an up climate, and on top of that, we got buyers, because the blue line is above the gray, call implied volatility above the put implied volatility. So we have buyers in the market, and the climate is up. So you would think, let's buy. Well, careful, because the market went too far too fast, and we are late to the party. So because of that, switching mode from directional trading to non-directional trading is advisable, or smart, I would say, beyond advisable. Why? Because, statistically speaking, that climate is not supposed to extend much more. I mean, we can see cases where some climates extend. It's not the first time we've seen it. It's not the last time we'll see it. But statistically speaking, it is less likely going to happen. And if it does, maybe it doesn't go that far either. Because, let me do this. So, let's say when the climate was here, right, and the market already went there, so it may stay blue for a little bit, but where did price go, right? Not too far either up or down. Okay, so again, when the climates went too far too fast, or they've been lasting for too long, it is not smart to have a strong bet on that to continue to be the same. Could it happen? Yes, of course. I mean, there are times where markets go completely crazy, completely nuts, completely against what probability suggests. But probabilities are there for reference, and they are indeed a very smart. It's probably the smartest reference you can use. Cool. So because of that, we are switching mode to non-directional trading. Now, in the world of non-directional trading, we have 2 options, which is to do. I mean, we have many options in options trading, but the ones we've been exploiting the most is double calendars or iron condors. Iron condors imply volatilities are expensive, and you want to sell options because implied volatility are expensive. There is plenty of premium built in the options. You want to collect all that hefty premium, and ideally keep it to yourself, and it's hefty, so it's nice. But there are times where implied volatility is low, where that's where we are right now in the S&P. Yeah, there are stocks in the market that may have high levels of volatility, but the S&P overall, by looking at implied volatility here, or I could load the chart of the VIX, would be on the bottom part, and therefore, because the volatility in the market overall it's in the lower end, the odds are in that, volatility tends to mean reverse. So, when we are lower, it tends to go back to the mean. When we are higher, it tends to go back to the mean. And right now we are in the lower end, so volatility is likely going to increase. So what strategy is the one that benefits from an increase of volatility while the market remains range bound? Well, those are the double calendars, and therefore, yes, Mark, you were absolutely right with question number one. Today is a good day to do double calendars, thinking on these terms. Okay, great. So I'm pretty positive that that's exactly what you thought. I'd love to get a confirmation from you, Mark, that was your thinking, or if you saw something else, or if you were considering something additional to what I just said. If you want to add it to your comments, that would be great. Now, second part is um, scanning for vertical spreads. Okay, now vertical spreads is something directional, and you may say, "Wait a moment, we just said it's time to do non-directional." Okay, well, you may have a collection of trades on your portfolio. I'm not sure this is what you're thinking, Mark, but let's say you had a collection of trades in your portfolio. Let's say the market moved in your direction a bit more today, and let's say trade 3 hit the target and you just closed it, right? And let's say trade 3 was a short. Okay, so like right now, let's say your portfolio is very heavily loaded with longs. You had some shorts, but now you just closed one short for a profit, which leaves you with less shorts, meaning that now you have even more positive delta than before. And because the climate is exhausted, 9 out of 5, 1.46 out of 6, 0.65, too far too fast, late to the party. So you are concerned, which fair enough, that the market may fall. And now that you have one short left in your portfolio, so now you are desperately looking for vertical spreads to go short, bear put spreads, to hedge the remaining long positions that you have in your portfolio. And therefore, today you are looking for that. You're looking for vertical spreads. Could be bullish, could be bearish, again, depending on the other trades that you have in your portfolio. Again, vertical spreads is also a great type of trade. Of course, it's directional, it's not non-directional. So I just gave you a reason why you may want to be directional when our market analysis suggests to be non-directional, which is you just close the trade and your portfolio now is unbalanced. You got too much positive delta, right? So that could be a case. But again, you are looking for directional trades, but still within the context of volatility is being low and therefore options being cheap. And therefore, again, Mark, perfect. You are looking for vertical spreads, which is a strategy where implied volatility is being low is a great beginning, because while vertical spreads are not too positive vega, they are a little bit positive vega, and therefore if implied volatility was to rally, the trade would benefit from that, and ideally the market is moving your direction and volatility will tend to go back to the mean, and now you have two ingredients that add profitability to your trade. So indeed your thinking is right, and the question is, how do you scan for that efficiently? Okay, Mark, so I did look at the VIX. It is relatively low. I checked at the DT volatility range 2, so my reasons copy yours. I love it, love it, love it. The rationale is there in place, and that is great because the ultimate goal, as always, is that you guys don't need me, even though that would make me very sad. But that's the ultimate goal, isn't it? That you guys, while we are not meeting, because we meet once per month in this session, right? So while we are not meeting during the month, you guys, independently, you're sitting in front of the screen, you're finding your trades, you're executing with confidence. So I love what you just said there. So coming back to the scanning, how do we scan for vertical spreads? So you have a collection of ways on how to do that. If we were to go from more simple to more advanced, on the simple side, you could just go ahead and look at, let me find them. You have here a scan inside DT technical scans for bear puts or bull calls. Okay, so bear puts or bull calls, those are spreads, which are vertical spreads. Okay, bear put is vertical, bull call is vertical, but to be honest, The bear call is also vertical. The bull put is also vertical, but they are credit strategies where the bear put and the bull call are debit strategies, which are the ones you will want to use in a scenario like today where implied volatility is low. So let's say you were looking for the bearish trade, right? Following my example with you're looking for a hedge. So you just click in here, and in that particular case, it's not bringing in any additional result. Maybe it's because I got something else check marked somewhere. So let me uncheck this and scan, and this gave me two opportunities. Okay, so Lulu and MSI. So again, if you're going to use these very simple scans, like the one I just used, the bear put spread, make sure that everything on the below part, everything about additional filters, I will just leave it on check and just rely 100% on those filters, because those filters, they are already designed to look at certain conditions that suggest that a bear put spread may be a good idea. Okay. Here's the setup in this particular case. So you can see a lot of profit margin up and below, UFOs above, blah, blah, blah. So again, not a bad idea. But at the same time, and again, I cannot help it. Sometimes, you'll see the perfectionist in me show up here. Okay. It's just like, for example, if you are trading Lulu and you want to do a spread, the best way to do it, to be honest, from a pragmatic approach, is to right click, send to strategy builder, 1, 2, 3, here are your trades, and now you decide, how much you want to risk. I want to risk 300. You click update, and these are your trades. You sort based on return on investment, and here's the bear put spread you want to take. That's it. Okay. So from that pragmatic point of view, this is the best way to plan your trade, and from a pragmatic point of view, this is probably the best way to find a spread, right? At the same time, again, cannot help it. Here's the perfectionist in me, where I may want to have more control over the various parameters that I want to use for my trade. And this is 100% in line with the rules of my trade plan. And that is 100% in line with the templates I have set up on my spread select, right? So I'm pretty positive you are all familiar with the templates that I have set up for bull call spread, bear put spreads, etc. So if I load the bear put spread and we look carefully at what I have here, so what do we have? Well, first of all, I'm looking at specific strike prices that are being picked based on the ideal strike zone, which is looking at things other than return on investment. When you use a strategy builder on the chart, basically it's looking for risk and return on investment, where the ideal strike zone, if you recall, just to be visual, I will load a risk graph, and I will point at this little box there. Okay, so this little box is based on the Chebyshev theorem, if you recall, and basically by picking strikes that meet that rule of being inside the ideal strike zone. So what this is going to do, let me load that. So what this is going to do is this is going to increase the probability of profitability. Okay. So this is something I want to do. This is part of my trade plan. Maybe you don't do. This is not part of your trade plan. Okay, so then you uncheck that. But because I do that, within the filtering methods I use, in a way, I would like to have this, in a way, taken into consideration. What else? If I look down, I also have some specific parameters that have to do with my Greeks. In this case, I have a minimum and maximum delta, but also when I get to the target, I want that gamma to remain positive, as you can see here. And also I have some requirements for Vega. So all of this is part of my filtering conditions. Why do I have those Greeks? I mean, we can have a very long conversation about the Greeks here, but basically what I'm trying to do is I'm trying to have the trade to be efficient along the way. Efficient from I'm thinking gamma really, because it's a directional play. gamma increases delta. This is the benefit of the debit strategies. And in this sense, I want to benefit from that as much as possible. So that's why I have the rule set the way I have. So again, I am aggressively directional. In other words, the moment I wear my hat of being directional, I am directional, not a joke, because I could set up my spreads with a very low delta, for example, and then I would use a directional strategy in a non-directional fashion. Maybe I use two strikes that are very close to each other, and then the trade profits very slowly. So it's directional, but very slowly directional. That's not what I'm doing. So that philosophy, you will see that later. I'll come back to that philosophy in a moment when I get back to the filtering. I haven't forgotten the question mark. Okay, I'm slightly deviating here, but you will see my point in a moment. So you will see how I try to achieve scenarios that would benefit from this type of Greeks. Okay, and then I have other requirements here when it comes to the minimum amount of premium I want to get when I sell my options, and then the risk and the reward. Which again, this is something that it's basically being assessed as you plan to trade. So now coming back to here. So what are my possibilities when it comes to filtering that try to generate opportunities that, number one, are going to fit well my templates that I'm going to use later on in the planning process, okay? While I also find opportunities that increase my odds of success the most I can. Because if I was to look at all stock symbols, right, and I look at the length of this list, let's call it 9,000. Okay, so you got, let's call it 9,000 stock, like 6,000 or something like that got options. So we're talking about a humongous market. So what can I do to narrow down that list to end up with opportunities which are what the market is asking, which are vertical spreads, but on top of that, try to be smart on the filtering process, on the screening process, where I am finding opportunities that by themselves, just because they are there, they already have odds to be stocks that are gonna likely going to fall because we are looking for bearish trades. So what can I do to accomplish those goals? And then find trades that then when I transfer that to the chart and I plan the trade and I build my spreads, I have a higher probability of meeting the rules I have on my spread select template, which is that type of Greeks, etc., etc., etc. Okay, what can I do? Well, first, maybe one way to think about it is to go from top to bottom. So first, I have two opportunities to do specific scans. We already talked about going the very simplistic route, the very pragmatic route, which is to get the bear put candidates. In this case, I'm not going to do that. In this case, I'm going to start with all stock symbols. Okay, all stock symbols. Now, if I think of all stock symbols, the first thing I want to make sure I do is that I get my stock rotation or my group rotation under control. You have heard me say a million times that stocks are a fragile instrument, and fragile may not even be the right word because, to be honest, it's a fantastic asset to trade. But by themselves, they are so tiny compared to the size of the market itself. So you gotta make sure that when you trade stocks, either to the long side or the short side, you are aware not only of the stock condition but also the group condition. Like, for example, if you trade a technology stock like Apple, you gotta make sure you understand what's going on to technology as an industry. Okay, and more specifically to the group. Okay, again, when we are looking at the U.S. market, within the U.S. market, you have the sectors. But then when you enter a sector, for example, basic materials, then you have chemical manufacturing, forestry and paper, general mining. So all of those are the groups. Okay, all of those are the groups. So you want to make sure that the groups are doing or likely going to do the same thing your stock is going to do or you want the stock to do. Okay, that way it's not like you're trading the stock by itself. You're trying to use an opportunity with a stock that gives you an edge within an industry or a group that is likely going to move in a direction. So if the stock happens to behave a little bit naughty, you want it to fall, but it resists and tries to go higher, well, that stock is going to experience the pressure of its group going down, and ideally, hopefully, the industry will drag the stock down with it. If the stock was not falling by itself, then the industry is helping it to fall, which is what you want. Okay, you don't want the stock to be a lonely guy. You want it to be you want it to be reinforced by its own industry. Okay, and in this case, reinforced to the downside because I'm looking for short, but the same concept applies to the upside. Okay, if anything I said makes no sense, please let me know. If everything I said makes sense, please let me know as well. Okay, just a quick okay or a quick all good, Jose, would work for me. But certainly, I've been giving a lot of information here, which I'm thinking makes a lot of sense, but I do need to make sure you are with me, and I appreciate very much, even if it's a quick all good, Jose. It makes my life easier on my end. Okay, so please get back to me with how is it going so far. Okay, so in other words, I selected all stocks on the top, and now I'm gonna make sure I have some conditions for my group or strength. Now, what kind of conditions am I gonna have? Well, in a perfect place, you got the long-term trend of that group is going down, and the mid-term trend of that group is also going down. And on top of that, if you want to add a little bit of momentum, so maybe you would say, well, that stock has just rotated to the downside. That group has just rotated to the downside. And if I scan, now I'm going to end up with a much shorter list. Look at how short it's been. It's 0. Why? Because notice at the beginning of doing that selection, I said in a perfect world. Well, in a perfect world means that you will get results doing such a demand, specifying such a demanding scenario. You will get results very few times per year. Most of the days you will not. Okay, so again, what's the S&P condition right now? Well, the S&P condition is that the S&P is going up. We said that before. So how many stocks and groups are going to be going down in the long term, in the midterm, and rotating now? Again, it's very demanding. So you have to be flexible with common sense when you do this selection. But, I would say the greatest amount of check marks you can have, the better. So in this case, I'm going to go for 1. And I still have a fairly long list. If I go for 2, I still have a okay list. You can also go the route of down, rotated in the last 10 days. So you do have some momentum that started happening to the downside not too long ago. And as you can see, this is just killing my filtering condition, and that's because the S&P has just been going up for 9 days in a row, so nothing has rotated down in the last 10 days as a group. So then I will need to keep that unchecked and scan based on those 2 guys with the 2 check marks. So again, you want to check mark as much as possible, but at the same time, you gotta understand things from a common sense point of view. Hopefully this makes sense. All okay. Thank you very much. Perfect. Okay. So what else? We got all stocks. We got a very powerful rule there that is telling us what to do to make sure that we have the power of the group on top of the power of the stock. What else can we do? Well, we can also get into technicals for the stock and do the same thing. Look for the stock to be going down. Look for the stock to have rotated down recently, let's say in the last 10 days. But again, if I do that, what's likely going to happen? Nothing. So same story. You can also uncheck that. But to be honest, my favorite approach when it comes to this particular filter is just to leave it on check, because in the end, isn't it that I'm going to add more filters, and in the end, I'm going to go and have to check the stock chart itself. So when I look at the stock chart, I will actually have an answer for what is the stock itself doing. So check marking this one in this case for this type of application is something that I prefer to leave alone. Okay, so I'm just going to leave it alone. Okay, and so far I have, it's not the longest list in the world, but it's not that long. Okay, so later I may even uncheck more. Okay, but so far that's what I am. Now, what else do I want to do? Okay, going back up. Okay, going back all the way on the top. Well, something else I want to do is, instead of taking every single stock in the world, in the US, I should say, what may want to do at this stage, and certainly to me this is a very powerful thing to do, is to look for stocks that from the option side are showing sellers. Okay, are showing sellers. This is something I would not see on the chart. Okay, I would need to look at options data, like the volatility comparison, right? So what can I do to save time? I could go ahead and get into my, here, advanced option scan, and I have two filtering conditions, which is top positive CIV and top negative CIV. And by looking at top negative CIV, this is going to give me a list of stocks, which all of them are showing sellers in the real time. So in the real time, the gray line is above the blue for those guys, above the blue line for those guys. So that is very powerful, because now you know those stocks are showing sellers, while those stocks belong to a group which is showing strength to the downside, and therefore that strength to the downside is likely to help for the stock to continue going down, where you have evidence from the options markets that sellers are available. Okay, they are sellers. Okay, so that is putting you in a very good position already. Now, of course, because the S&P is up in a major way, and we are looking for shorting opportunities, so this list is it's actually concerning on how short that list is already. So I may end up on checking some of the conditions to make this list a little longer, okay, if needed. I'm not going to do it yet, but I'm just doing it so you get to see. So again, in order to filter with the matrix, Mark, you want to have a very structured thinking process, but you want to be flexible to check or uncheck certain parameters, just because depending on the market condition that you're looking at and what the market is actually doing, you may find too many opportunities or too little. Like, for example, if I was to look for longs, probably I'm gonna have a very long list. Why? Because the S&P is up in a major way, even though we are late to the party to be directional long. But maybe directional short, especially for a hedge, makes a lot of sense. But because the S&P is up in a major way, so you find very few. Okay, so in that sense, you want to be adaptable. You want to use a bit of common sense within a rigid, very defined process where you know what you're trying to do. And in a perfect world, again, you check mark so many of those check marks, but given the market condition, you may be forced to uncheck a few so you get some opportunities. Okay. Yes, getting there, Mark. Sorry, Joe. I'm getting there. So again, the options volume map. It's a great tool to when thinking about continuation. Okay, continuation of a move. So if I was to look for a trade in the direction of the trend, I would certainly think of scanning based on that. That would be very useful. But because I am actually thinking of trading in the opposite direction of the trend in this sense, I'm going to give less relevance to the volume map in this sense. So I'll come back to that because, of course, your point, Joe, makes a lot of sense. Okay, so I'll get back to that. But again, in this particular scenario, I would pay more attention to what is the group doing and do we have sellers in the market, which is where I am so far. Now, what else do I need? Well, because I am looking for an opportunity to do bear puts, which are debit strategies, I want to make sure my options are cheap. And in order to find out my options are cheap, I would add as a scan number 2 another filtering condition, which is CIV mean is less than 20. Okay, and when I do that, my list is going to be even shorter. In this case, only one. So now I'm going very extreme, where that stock got sellers. That stock belonged to a weak industry going down in the long term and the midterm, and on top of that, the options for that stock are not expensive. They are on the cheap side. So if I was to do a bear put spread, I got plenty of advantages in my favor. Okay. Now, of course, before accepting the trade, you will need to come and look at the chart and all of that. Okay. But again, hopefully the rationale so far it's making sense. So I got a bit more to share here. Yeah, Joe, with the 5-day put in balance. Yeah, get you. So again, coming back there, okay. But again, at this stage, because I'm looking for a hedge, I'm looking for a trade in the opposite direction of the trend, of the S&P trend, if you wish. I am not thinking continuation of the move. I am more thinking about anything that is an okay opportunity. It doesn't need to be an opportunity which is going to give me a 20 to 1, right? Because I am not looking for something in the direction of the trend. I'm looking something to hedge. And of course, if it gives me a great profit margin, it's even better. But maybe I'm just going to collect a small bounce, which is going to be good enough in the context of a hedge. Again, if you think of about the S&P, for example, if the S&P was to go down, statistically speaking, it's supposed to go down for 4 candles. So I don't need to find a trade which is a 20 to 1. Maybe I'm just finding even a 1 to 1, a 2 to 1, whatever. That's going to be good enough. So adding the volume map here, again, the volume map, when you think volume map, think of continuation, right? So is the current movement likely going to continue, or is the current movement likely going to change direction? Okay, that's kind of like what I'm thinking. And you could certainly use the volume map as well to try to assess if a move is not going to continue. But again, I think it's more efficient to do it the way I'm doing right now. Okay. At this stage, okay, and let's say again, just to mix my answer for you, Mark, as well as Joe. At this stage, one very powerful application could be to save your results, right, and then reuse them on the scan list. Okay, sorry, not as an import, but use the scan list. Okay, so in other words, you save something to a scan list, and whatever you save, then you use it as a scan list. So you could let's be picky. Okay, I talked about being perfectionist. So you could do the filtering I did, and now let's say you want to add the volume map. So you can come in here. Here. Okay, you come here on volume map, and either the positive or negative for the current month and the next month, you could apply it then to use the scan list. So you filter based on what I have on the screen, and you refilter that based on the volume map. You could do that, but again, in a market like today, it's too much filtering. You're gonna end up with no opportunities. Okay, so because again, the market condition is extremely bullish at this moment in time, even though it's statistically reaching its end, but it's extremely bullish. So you will find very few of the trades on the opposite direction. Okay, so it will not be productive to do it that way, but this is one possibility for you to explore. So hopefully that helps. Let me see if I'm not missing a comment here from Mark. So I am not getting the same scan results. Do you have another filter checked? Yes, possibly. Possibly. I haven't looked at all my tabs yet, Mark. And also, I have a minimum price of 34. I have a minimum volume of 300. I have all US stock. So again, I have stocks only. I didn't have stocks and ETFs. So again, there may be some differences in some places. Okay, so I haven't finished yet. To be honest, at this stage, it doesn't matter if what you see on your screen matches exactly what I have on my screen. What matters is that you get the process, which it's what I believe you need, Mark. Okay. So again, we started from the top, with looking at all symbols. Then we filtered down based on the strength, and we ended up with leaving 2 check marks. And then I got a bit pickier by looking at top negative CIV spread and then cheap options. So at this stage, if I was to use English words to define what we have, so we have stocks where sellers are on board that belongs to groups that are weak, where their options are cheap. That's what we have. That's a very good starting point. Maybe even good enough for you to just now turn on the UFOs and take your trades. Okay. Now, having said that, and by the way, price is inside of a red UFO. Oh, actually, that's the S&P. Sorry, that's the S&P. I thought I switched to the stock. Okay, so what else can we do? Well, you can add other filters. Okay, so the options filter in this case does not apply because we're not filtering for options contracts. That would only apply if you are filtering for option symbols themselves. Okay, which is not the case. The scan list in this case, I'm just going to leave it alone, but you know what this is need. You can import your own lists. And then we have other possibilities here. So in this case, everything is unchecked. Okay, in this case, everything is unchecked. But there are a few possibilities here for you to utilize from either this tab or the auto climate tab as well. So if you're utilizing auto climate, probably the easiest way is that you forget about these Elliott wave turning points and Tom strength level tab. You may want to just forget about it, because then you're gonna double check things on the screen with the auto climate, and the results are gonna be fairly similar in many cases. So in order to save you screen time, so probably you just focus on auto climate and that's it. Even though I will make a few comments about the other tab in a moment, just in case. Okay, but again, don't be too picky, especially in today's case where we're looking for shorts in a non-market, because you will get very few opportunities. So what do you want to find when looking for shorts? Okay, what would help the trade even more? Well, what would help the trade even more, and again, I'm going to start with in a perfect world, it's to be in an early climate in a weekly time frame, and be in a down climate that is sensible or better, so sensible or early, okay, and near the 9 EMA. That would be perfect, amazing, right? But again, if we do that, probably we get nothing. To be honest, even if I was to remove this condition, probably I still get nothing. Even if I remove this condition, probably I get nothing, because this is extremely demanding. In an up climate, I'm asking for the weekly climate to be down, right? So again, it's very unlikely. So you have to be balanced, okay? Again, depending on the type of trade that you're looking for, okay, depending on the type of trade that you're looking for, you need to keep in mind what is it that you're looking for. And by the way, I understand that in a way, while the process I'm following is to be honest, just common sense. The one thing that happens here is that you may be thinking, oh, how do I remember these? Well, one easy way to save yourself time is to create multiple pages, okay, with multiple matrix. You can open multiple matrix per page, okay? So maybe you have, two matrix, okay, one on the left and one on the right. And the one on the left is to be bearish, and the one on the right is to be bullish. And what you do, you keep that on a page and you save that page. And you call that page, bullish screeners or whatever. So many of the key elements that you always check mark are already check mark in that page. And you just need to vary, maybe, like for example, the comments I made about the group, where sometimes there are not enough opportunities and you have to uncheck. So you just vary things of that sort, but the other type of components, they are already set for you because you save it on a page. Maybe that helps you as well, okay? So right now I'm just giving you the whole rationale, but beyond the whole rationale, for sure, use pages and matrix, and you can have multiple matrix per page and save pages and all of that. So get organized in a way where you save time. You also avoid mistakes by having a preset matrix instead of having to check mark the whole set of checks every single time, because if you do that every time, odds are you may forget things, okay? Because again, we are human. So let me go ahead and go back to negatives, to less than 20. And so what's the issue here? Well, the issue here is that I'm check marking way too many things. So near the 9 EMA probably is not going to work. Well, actually, it worked the moment I unchecked, which means that WGO is already in a down climate. So that's great. As you can see, it's already on a down climate. So this is good. Okay, so in this sense, that was relatively easy. But many times, let's face it, you are not gonna get it. So when thinking about trading in the opposite direction of the S&P, in this case, which is what we're doing, so another element for you to keep in mind is, if I don't have a down climate yet, what about I look for the complete opposite, which is an up climate, which is late, right? So if I was to click scan, I may get nothing. Let me be a bit less demanding here, just to see if I do get something. No. Let me see, like that. No, I didn't get anything. So again, that's what I meant before. Okay, now, so I just want to show you an example. So if I look at that, so this guy is way too extended, statistically speaking, 26 out of 10, right? So again, if you don't find anything like what we found, which is confirmed down, and is sensible, which means it's healthy to enter to the downside. Okay, if you don't find anything like that, okay, which we did, so you may want to look for the complete opposite, which is confirm up late. So now you are finding extreme examples where, you know, odds are that they will change direction. Okay, and if the market overall changes direction and those stocks belong to a group which is weak, so all of these works in your favor. Okay, so this is one way to think about it using autoclimate. Okay, so you have your you have your top negative CIV spread, you have your cheap options, you have your weak and weak group, midterm, short term, and you end up with that symbol. That's what I've got. Okay, so far, good. Okay, so now what is another possibility for you to scan? Instead of looking at the climate, you can use strength. Okay, the strength level. You can have the primary, and you can have an additional, which allows you to look at two different time frames. Okay, so what is it that you may want to find here? Well, to be honest, the results that you're going to get here are very similar to autoclimate. Okay, very similar. But again, you may prefer to do that. For example, the TSL, the Tom strength levels, they range from +4 to -4 with a neutral zone. The ideal place where to enter a trade is the neutral. Okay, the neutral. If you want a little bit of confirmation to the downside, entering in -1 is still okay, because you have a little bit of confirmation it's going down already, and it may continue going down a bit more. It's like you have a confirmed climate to the downside. It's similar to that. Not exactly the same, but similar. So if I was to scan based on that, well, WGO is still giving me that same return, right? Same result. Just like if I had used autoclimate, confirmed down, sensible, and I scan, I got the same result. Okay, so again, it's a similar setting, but you know, if you like TCL, nothing wrong with that. Here the beauty is that maybe you have more choices. I mean, it's still 4 above and 4 below, which in a way is very similar to early, sensitive, sensible, hopeful, and late. So it's very similar. Okay, so that's why, you know, since in the end you're gonna reconfirm things on the screen, and I would say odds are that you use autoclimate. So probably utilizing autoclimate for this filtering condition it's more convenient to save you time. Okay. But anyway, so you have selected your scan 1, scan 2, the way we said. You have your group, you have your autoclimate, and you have your strength. So then the last one I would check is the earnings, because again, when you do strategies which are directional, ideally you want to avoid earnings to be on the way. And in this sense, I have selected here exclude results where earnings are happening in the next 30 days. If you were to uncheck that, probably we're gonna get more results. Actually, we didn't. Okay, interesting. Oh, wait a moment. Did I check something? Okay, so I guess real time as we speak, that stock has changed its behavior and is not part of the list anymore. I mean, this is real time, so I guess it's Murphy's law. Not ideal that it happened now, but at the same time, good example. So anyway, so coming back to earnings, if you uncheck, probably you're gonna get more results. In this case, just a few more. Okay. So again, depending on your settings here. So again, keep in mind that for debit strategies, it's good that you give yourself some time. For credit strategies, you may want actually to do the opposite, because the closer you are to earnings, the volatility has probably risen. But again, that's for credit trades. So you may want to be closer to earnings, where for debit trades, you normally want to be further away, so you can buy cheaper options and experience the increase of volatility as you are approaching earnings. So again, it's two different philosophies of trading: debit trades, credit trades. Again, we've talked about that millions of times. So that would be a very efficient way to do your scans. And this is, I would suggest to do. Okay, Mark, let me know if you have any question there. Joe, opposite direction, group up with stock TSL as an extreme. You mean group up and TSL as the extreme up, or group up? I mean, just want to make sure I got you, because the group should always be in our favor. Okay, the fact that the group is strong up, okay, the fact that the group is strong up increases the chances for this to continue to be for all the stocks that belong to that group. So if you want a short, you don't want the group to be up. You want the group to be down. Okay, you want the group to be down. And then, yes, I get your point. If you get a very high TSL above, this is unsustainable for the stock. Just like if you had an auto climate, like I did before, where you had the auto climate up and it was late. So this is unsustainable to the upside. This is unsustainable to the upside, TSL4. But you want the group in your favor down. You don't want the group to be up, because if the group is up, the probability of this to continue to the upside is higher. So you want the group to be down. And by the way, if you know, there are cases where the market has been moving in a direction for so long that you don't have anything long-term down. So then you will need to rely on midterm to be down. But at least the midterm needs to be down. And there may be cases that you need a hedge and there is nothing to hedge with because the market has been so strong. We see that extremely rarely, but it happens sometimes. So then what you will want is you will want a rotation in the past few days. And if nothing happened there, so then at least you want the rotation on the stock, right? So again, as many check marks as possible is what you want. But the more check marks you add, the less the probability you will have results. So sometimes you have to end up with few check marks, like me now, where I only have one check mark, so I get some results. Okay, sometimes that will happen, but definitely the group. You always need to think about the group as more powerful than the stock. So if you want to short the stock, you never, ever, ever want to see the group up. Never. You want to see the group down, and it's okay to have the TSL all the way on number 4, which is very bullish, but it's very bullish and sustainable within the context of a down group. Okay, so hopefully that makes sense. I mean, it would be like, could you catch a stock which is totally all the way basically kissing the moon, where the group is also kissing the moon and the whole thing collapses? Could you catch that? Yes, but that's going to be like once every 5 years. Okay, so most of the times you will find stocks that are behaving in a way that is irrational to the upside, turning, but that's going to happen in the context of groups that show weakness. At least for the stock to turn down and continue going down. If the stock is irrationally high and turns down within an up group, well, what most of the times will happen is that the stock, which is irrationally high, turns down, but because the group is up, then the stock then continues and resumes the move to the upside because the group is going up. You don't want that. What you want is you want a continuation to the downside, and that will be provided by the group being down. So you want to avoid groups ups when looking for shorts. Hopefully that makes sense. Okay. For content trend, take advantage of a correction. Yeah, but again, that's my point of view. Okay, and again, there is no right or wrong, but that's my point of view, Joe. Because we are dealing with stocks. If we were trading options on futures, it's a different story. But we are dealing with stocks. We got 9,000 of them. So I want to be picky, and I want to stack as many odds as possible in my favor. So even though I may be only shooting for a correction, I still want the group to give an opportunity for a full impulse to the downside instead of just a correction. If in the end I only capture a correction, great. But I have a higher chance to capture a correction to the downside if instead of a correction is actually an impulse. So I want the group in my favor. Okay. Again, that's my approach. Those are my rules. And I'm not saying you cannot make money otherwise. But I guess that from a common sense point of view, you are probably with me, isn't it? That this would have a higher chance of producing results to the downside if the group is in your favor. TSL4, fine. Cool. Okay. And yeah, so that's it. I see if I use the penny increments can list, I get 0 results. Yes, of course, because again, the S&P is up. So you are looking for short-term opportunities. So, you're going to have to give up on something to find your trades because the S&P is up 9 out of 5. Again, if I look at the S&P, this is an extreme condition, right? 1.46 out of 0.65. That is not a joke. That is not a joke. And therefore, it's difficult to find shorting opportunities. It's difficult unless you take more risk. And how do you take more risk? You get less check marks. Okay? It's not like what we're doing is nonsense. It's that what happens is that the market condition is producing little results in this direction. Now, if you turn it around and what you're looking for is buying opportunities, now you're going to have too many opportunities, even if you use the scan list with the penny increment options. Okay? So this is where common sense needs to be added to the rules. And that common sense is going to help you to decide which check marks to keep and which check marks to get rid of. The rule of thumb is you want as many check marks as possible, but that will imply too little opportunities at times. So then you want to use, the rationale of this method to get rid of some check marks. So you increase the list of opportunities enough until you find the trade you need, knowing that there are more trades in the market, but they would have less odds because maybe the group is not in their favor or whatever is not in their favor. But by filtering out and ending up with a short list, then you are stacking odds in your favor just by filtering out. And then, of course, the chart will reconfirm if the trade is to be taken or not. Cool. So, my friends, we have reached the end of the session. Actually, we surpassed it by 10 minutes. Thank you for staying with me. My pleasure, as always, to be part of this. Hopefully, this was useful. Great questions, my friends. Have your questions ready for future sessions as well as we did today. That was great. So we can get deep into subjects and again, hopefully take what you do to the next level. Funny, I said tick because today it seems that everything was about ticking or unticking those check marks. Anyway, you take care, my friends. See you in the next one. Thanks for joining me. If you're watching this recorded, pleasure that you're watching as well. Keep up the good work, everybody. And remember, we are here to help. Shoot emails, use the question page. Do not be shy. Join us live. Watch the recordings. Whatever you do, we're here to help. Take care. See you soon. Bye-bye.